The 12.4 trillion shilling debt that Kenya has at the moment is a combination of external and internal debts. The debt portfolio for internal debt is probably what is more worrying to the economy, because local banks should actually be in a position to provide credit that would essentially run the economy through SMEs. That's what should be the preserve. That's how it has happened for a lot of countries around the world. But government is the biggest borrower from local banks right now. And local banks can give that because there's a guarantee that it's government, it's perpetual, quote unquote, and it's not going anywhere. So you lock out people who would then be agents of growth for the economy and give it to government, who not their job to run business, but to create an environment where it's conducive for business to run and flow. But we keep incurring this debt. So can you actually have a moving economy where you have a debt portfolio that has locked out credit that should go towards building the economy in the first place?
Yeah, that question is a valid question, but there are two aspects I need to talk about. One, it's true that when the government borrows domestically significantly, it will crowd out the private sector. That's a fact. But there is a policy. I remember when Kibaki came to power, there is a policy that we came up with which encouraged that the Treasury should, as much as possible, through Treasury bonds in particular, longer-term Treasury bonds and so forth, borrow locally. It has two advantages. One, you will also limit the exposure in terms of the foreign exchange in case of the volatility in the exchange rate. So there'll be, you'll be avoiding that. And two, if you're borrowing locally, then you're also giving capacity to the institutions that are locally to be able to, encourage your capital, expand your capital markets, particularly in the bond market and so forth. But the one thing that I know, which has been a challenge, even when we are not borrowing domestically, our banks have been a bit shy for a very long time in lending to particularly the informal sector. And this is a country where 80% of the economy is subsistence, is informal. And for you, if you're in agriculture, for example, or if you're in the formal sector, small and medium-sized enterprise, for you to access credit has always been a big challenge. And in fact, I have personally been insisting for a long time that this is one of the failures of the central bank as a regulator, that they have always focused on regulatory aspects, but they have not been focusing on facilitating the access of credit to the economy. There are countries where for you to run a bank, for you to be licensed, a certain percentage of your money, your loans must go to agriculture, a certain percentage of your loan must go to SMEs. That's the way to, deliberately encourage lending to those institutions. That way, then you will ring-fence money, whether the government wants to borrow or not for treasury, but you will have money always for the private sector, for those areas that the government deems necessary. But without that, when central bank simply wants these guys to show a very good balance sheet, or P&L account every year or balance sheet, then they're allowed to simply, lend to government, and there you get, crazy profits. That's why even in the worst of our economic situations, any year when we have performed the worst, the financial institutions have always made huge profits. There's no correlation, because they've always said, I want to put my money where? In the government.